Good morning, good afternoon, wherever you're joining us from. You're welcome to another edition of Fintech Podcast Africa on the horses of Fintech Magazine Africa and Financial Inclusion Africa. My name is Olu. I'll be your host for today. I know it's going to be an exciting program today once more, and I know you're all tuned in just to listen and contribute to what we're going to talk about today. Definitely, I know everybody is aware of the topic we're talking about today. We're just going to be dealing with the rise of mobile money platforms and their impact of financial inclusion. That is the topic we have on today. There's no other person that is going to delve into this topic with us than Miss Emily Odindo. Miss Emily Odindo is from Kenya. Emily is a fintech enabler and the founder of the company called PIM in Kenya. She has an extensive experience in both banking and fintech. She has spearheaded her growth initiative across credit tech, wealth tech, payments, and omni-channel solutions. At PIM Company, Emily leads efforts in the resale and market entry of fintech solutions while also forging strategic partnerships, facilitating mergers and acquisition, and creating co-investment opportunities within the fintech space in Kenya and in Africa. Our passion for leadership, especially among the younger generation, is evident in our mentoring activities and leadership training programs within the tech industry in Ghana and in Africa. Before transitioning to fintech, Emily spent nearly a decade at KCB branch, KCB Bank, where she held various roles, including branch manager and led team in operations, Platinum Banking Services, micro and SME banking and sales. Emily is a certified fintech practitioner from the London Institute of Banking and Finance, and she holds an undergraduate degree in business and French. Comment ça va aujourd'hui? In addition to her work at PIM, she authors the Demystifying Fintech blog, where she simplifies complex fintech concepts for a broad audience. I'm pretty sure she has a pedigree actually to talk about the topic we have today, and I know it's going to be a very insightful one. Miss Emilio Dindo, you're welcome to the program today.
Thank you very much, Olu. It is a pleasure, and it's a pleasure for you to have invited me to the Financial Inclusion Africa to participate in this conversation about the rise of mobile money platforms and their impact on financial inclusion. It is indeed a topic that is close to my heart because financial inclusion means bringing in the underserved and the unbanked in our communities.
Thank you very much. Thank you very much. It's a pleasure having you today. Ladies and gentlemen, this is not my natural environment, but I'm going to do my best to make sure that you have an exciting time today. We're talking about the rise of mobile money platforms and their impact on financial inclusion. Let's get to the background and the context. Let's say that first. Let me ask you this question. What do you think inspired the rise of mobile money platforms in Africa, and what are the key factors that so far has contributed to the success?
So, Olu, I would have a bias when I'm discussing mobile money. I'll have a bias towards M-Pesa because I am in that ecosystem, and so I am more familiar with that. And in any instance, it is more or less the poster boy for mobile money. So I can say what inspired the rise of mobile money in this space was the rural-urban migration. It was a major catalyst because we were having many people who were working in the urban areas and they needed to send money back home to their families, and there was no reliable railroad for that. So that inspired the rise of mobile money. And the success of this was driven by a good mobile connectivity and also the convenience and the safety of sending this money. Prior to this, you'd send this money probably using another human being, and you cannot guarantee the safety of that. Also, it was very easy for people to receive this money because then it's coming via an SMS, something that people are already familiar with. And something else that really contributed to the success was an extensive agent network that people could be able to withdraw this money from the numerous agents that were positioned all over the country. And in comparison to trying to get somebody to move with your money from the urban area to the rural area, the cost was relatively low. And again, I would emphasize the peace of mind of just knowing that you're not banking on someone's integrity to get the money to the destination really contributed to the rise of this mobile money.
Thank you very much. You've actually expressed your bias in a very strong manner, and you definitely struck the nail on the head of the topic. But let me also ask you this, based on the fact that you have a very good understanding of the subject matter today. Could you give us a brief history of mobile money and how it has evolved over the years? And I'd like to also add that in what ways has mobile money been a changer for people with limited access to traditional banking services? Just a little history, and also how it has been a game changer for people with access to traditional banking services. Over to you, ma'am.
Okay, so brief history is that it was launched in 2007. That is, mobile money M-Pesa was launched in 2007. However, there was the post-election violence in Kenya in 2008 served to accelerate the adoption because now people were locked in different spaces and they needed to send money to family and friends to be able to move around and also just to buy their daily provisions. So this is what accelerated its adoption in 2008. How M-Pesa started, it started with the option of send money. That was the first option. Then over time, they had the bill payments option added, and then also they brought in the international money transfer. This now moved them from just a send money option to probably, let's say, a digital platform, which is how it's operating today. Another thing that has actually accelerated the growth of M-Pesa was the COVID-19 pandemic. You can see that the consumer portion of M-Pesa really grew from 2007 up until 2019. But then the business component of M-Pesa now was accelerated by COVID-19. We had businesses closing down and people not wanting to go out, so we had delivery services and very many online shops. And of course, being as it is that now you want to have e-commerce, you need to have a checkout. And this checkout, the preferred service provider ended up being M-Pesa. And you can even see that before COVID, the traffic of money from bank to M-Pesa was 3 times. Sorry, the traffic from M-Pesa to bank was 3 times higher than bank to M-Pesa. But now we are seeing a lot of movement of money from bank to M-Pesa, which is 4 times. In fact, for many banks, their biggest deposit mobilizer is now M-Pesa. So mobile money has been able to evolve just from a send money and also from the consumer space, and now has dominance even in the business space.
Oh, thank you. That's beautiful. You actually um, went to give us that history, especially the evolution of mobile banking, especially in Kenya. And now let us move into financial inclusion. And I'm going to wrap this up in a package for you, in a bouquet for you. I'll first ask you, and would like to know from you. Um, How do you think mobile money platforms so far has contributed to improving financial inclusion in underbanked and rural populations? And I will also, to put it straight to you, what demographic groups have been benefiting from this mobile banking and with the growth of mobile money services? What demographic groups? And I would like to put the next one or to you. What are the biggest barriers to financial inclusion, and how are mobile money platforms helping to overcome these challenges? Thank you.
Okay, thank you for that. So, to begin with, how mobile money has improved financial inclusion for the underbanked. It's like it has brought the bank right into their homes. The underbanked or underserved now have equivalent of bank accounts in the form of their digital money wallets. And this you can have it either on your feature phone or on your smartphone. So it's made financial services accessible to them. It has made it convenient and affordable. So in general, where we were having 23% financial inclusion in this market, mobile money has been able to move it to now 85%. When it started roughly in 2011, the rate was 23, and now it's at 85%. So it really shows the penetration of mobile money, financial inclusion thanks to mobile money. And the demographic groups that have benefited most are smallholder farmers who are normally in the rural areas. In the urban areas, we do have informal sector workers. These ones were also underbanked previously. We have young entrepreneurs, and not only young entrepreneurs, even young, let me say even the youth generally are also beneficiaries. I will tell you a short story after I'm done with that. Then there is the people who live in the rural areas where the access to a physical bank is so far away from them. We have the micro and small enterprises. For a long time, these ones have been underserved. So they have also benefited from mobile money growth. And then we do have women who face some socio-economic barriers. They have also significantly benefited. And there's a new demography that has just come into the picture recently. And these are the people who are in the diaspora, especially the ones who are going to do the low-skilled workforce that have moved to the Middle East. For a good period of time, we are also having a situation whereby they were going to be underserved. But thanks to the mobile money, they are also benefiting from this financial inclusion. So you had also asked me about the barriers to financial inclusion. Initially, the barriers would be things like somebody not having the necessary documents like ID, so they would not open a bank account. Then we had things like digital literacy or financial literacy. When somebody lacked financial literacy, they would not approach a financial institution and have a bank account. Then there's the infrastructure. Prior to mobile money, maybe somebody had to travel so many kilometers to access a physical bank. So this was a barrier also. And then the high transaction fees. For the longest time before this disruption, it was very expensive to maintain a bank account. So these are some of the barriers that existed that were blocking financial inclusion. However, mobile money has been able to address these barriers. In the scenario of digital and financial literacy, some of these mobile money platforms, they promote digital literacy and also financial literacy. And also they have very easy to use interfaces. Even someone with little education or with not a lot of know-how on how to use, to operate digitally, they are able to navigate even using the USSD. And then another good thing that has addressed this challenge of infrastructure is an extensive agent network. Now, nobody needs to walk more than 2 kilometers before they actually see an agent. Even in the deepest parts, you would actually probably find an agent within 2 kilometers. And then there's a relatively lower transaction fees, which is making the services more accessible. Over
Thank
to
you.
you.
Yeah, thank you for that. I like the way you actually itemize the barriers and how you've actually come to let us know the impact that mobile money really has on those on rural populations and what it has done and also to solve the problems that exist before now. That is true, and that is a good thing to know that mobile money it's not just what we say, but it's really achieving impact. It's all about impact. Thank you very much about that. And talking about impact, so let's talk about some social economic impact. I'd like to ask you that how has the adoption of mobile money impacted local economies, especially in rural and low communities? Not just that, can you please share examples of how mobile money has enabled entrepreneurship and business growth, particularly for small scale enterprises, small entrepreneurs? And to wrap it up, I'd like you also to talk about the role that mobile money has played in remittances and cross-border transactions within Africa. Are there issues with this? Are there problems? And what stages are we in Africa? Because we still have those challenges in border transactions. Thank you.
Thank you, Olu. So, the impact of mobile money on the local communities and the rural communities, I can say that mobile money has really stimulated economic activities. One, by, one of the things that any trader normally faces is an issue with collection and also an issue with actually receiving the money real time. So mobile money has enabled the traders to receive their monies real time, and this enables them to purchase more, to scale their businesses, to access credit, and also that visibility of inflows and outflows. It enables them to plan, and they are also able to save from this, and this leads to greater empowerment for these ones and also financial resilience in low income communities. Another thing that we'd say has really helped, mobile money has helped to impact local economies. You can imagine, like in this scenario, we have over a million agents, a million merchants in this market. This has created job opportunities, and it has also created business opportunities, because these are all shops and people open them and they get revenue from that. So it's really stimulated local economies. And by way of example, especially in terms of provision of credit, because real-time settlement, that one we know, it's send money, pay to a bill, and immediately it reflects on the wallet of the merchant, and they are able to do other things with it. Even in some instances, transfer straight to their bank account and have a better relationship with their bank. But when it comes to provision of credit to help scale their businesses, some examples that I would have in the market is one like M-Pesa. They do have a product called Pochi, which allows the small scale traders to access loans, helping them grow their businesses, because they have visibility of what money they get through their businesses. And then we have several fintechs in the market like Pezesha, who are leveraging M-Pesa transaction data to provide businesses with credit, drive their. So if mobile money was not in the picture, like before, SMEs and MSMEs were having a very difficult time accessing credit. But thanks to this, the provider of the mobile money is able to provide them with credit, and even other providers are able to leverage on the same statements to provide them with credit. And to the next question that you had asked about the role that mobile money plays in remittances and cross-border transactions, I can say mobile money has reduced the complexity of international remittances. It has become very easy. Initially, I remember in the past when I had a relative who lives in the US and they had to send me money, You had to get a Western Union number, walk to a place, like a bank, and then withdraw it. It was really complex, and also it was very costly. But now it just comes to your phone. It has really reduced the cost and also the complexity of such remittances. I can say in terms of figures, M-Pesa has lowered transfer fees from 10 to 15% to now just within 3% within Africa. So you can see the impact even on the wallet. Before this, I mean, the rates were higher.
Interesting, interesting. That's quite interesting. Impact, cross-border payments, reduction of rates, and easy access. And that's very good. Thank you for that. Let's talk about some technological issues, and also especially when it comes to mobile money. You made mention about remittances. It's a very dicey situation. I think it's something that I need to ask you. What do you think are the key regulatory challenges facing mobile money platforms, and how are they being addressed? Because it's moving money from one country to the other, looking at the issues involved with it and the complexities. What are those challenges, and how they been resolved? How they been addressed?
Well, Olu, I lost you for a minute. What was the first question?
Yeah, it's only one question. I'm asking you, what are the key regulatory challenges facing mobile money platforms, and are they being addressed?
Thank you. So I think the major regulatory challenge for mobile money, especially in cross-border, is the fragmented regulations across different countries. So this creates compliance challenges because when we're talking mobile money, we are talking borderless money. However, as we are trying to be borderless, we are also bound by the different regulations in different jurisdictions. And so it brings challenges in how to handle anti-money laundering and also how to handle consumer protection. So, I mean, there are discussions to harmonize regulation across the continent. We hope this would happen, but now it's still a challenge. And I can say individual countries are addressing these issues differently. Some are developing their own tailored mobile money regulations using through their CBK, through their central banks and also other regulators. And across the countries, each country is trying to come up with their own consumer and data regulations. And this is, of course, important because it fosters innovation and it also ensures consumer confidence. When the consumer can see that some laws are being drafted, it gives them confidence to interact with these platforms.
Thank you for that. It's very important to know that when we talk about mobile money, there are components of, how do I put it? It cut across various industries, and it cut across various organizations. You have the telecom companies, you have the banks, you have the fintechs, and you have also other feeder organizations. My question to you would be, how important do you think all these organizations can work together for the future growth of mobile money platforms? And that's the question. How important do you think that collaboration is, and how can we achieve that?
Well, Olu, collaboration is key. Initially when we were beginning to have conversations around fintech, people were always saying things like the banks are dead, you no longer have the bank. However, the narrative changed from competition to collaboration because all these players they bring some unique strengths to the table. Telcos they bring infrastructure, and they bring their wide base of clientele. Banks, they contribute regulatory compliance and their robust risk management. And fintechs are very nimble. They really drive innovation. So when these three parties collaborate, they create a more inclusive and a more efficient financial ecosystem. It's easier for all of them to move with speed. instead of working in silos. And of course, sometimes fintechs are very nimble, but they do not have some of the resources to scale. So it's good to then collaborate with the bank and some of these telcos, and all of them will be able to move quickly and achieve their goals.
Thank you. We spoke earlier about regulation. We're gonna be getting back into regulation, but let me ask you. There are quite a number of innovations that we have seen in this ecosystem. Let me ask you, how do you think innovations like biometric authentication, interoperability, and blockchain technology have really impacted the industry? And what are the potential future trends or disruptive technologies that could further shape the mobile money landscaping?
That's a good question, Olu. Thank you. And let's look at something like biometric authentication. This has really enhanced security of when we are accessing mobile money. And the best one I like is that it improves the user experience. We know many people, many platforms will want to have two-factor authentication, but in instances, sometimes something like the OTP, you can sit, try to initiate a transaction, and the OTP comes 15 minutes later. Even there are some days an OTP has showed up in my phone the next day, and I even get scared, is someone trying to access my account? But then, with biometric authentication, there is the improved user experience. You can immediately have your two-factor authentication security working seamlessly. Then we have innovation like interoperability, how it has shaped the industry. Of course, interoperability has made services very seamless across service providers. I like the way it's so easy nowadays to move money from your mobile money to your bank, or from your bank to your mobile money and transact, or from your mobile money to, even pay a card payment, or even across different telcos. It's really made it seamless across different providers. And blockchain, how it has shaped the industry, it's still emerging, but at least it's beginning to address issues around transparency and security. And we would see blockchain playing a bigger role even in cross-border payments in the future. And you had also asked about future trends or disruptive technologies that I can see can shape the mobile money landscape. I can say something like AI. We will see AI driving things like personalization of products and services in the future. We will also have a lot of embedded finance, especially in online products. Once you purchase something, you get a prompt to for something that then works with it. Like you're getting a phone, you bought it, immediately you get a prompt to buy insurance. So we'll have a lot of embedded products. And I'm also foreseeing you are having discussions around financial health, financial inclusion, but I'm seeing the narrative will start moving from financial inclusion to financial health, because right now, if you're talking about 23%, moving from 23% financial inclusion to 85, it means we are having a situation whereby many people will be financially included. And now we will step up this narrative to financial health. And this means we will now have products like savings, investments, and insurance products growing. In the first narrative for inclusion, we had products that help people have accounts to be able to save and transfer money and make payments. Then now, and also loans, credit products. But now we should be able to have a shift to savings, investments, and insurance.
Thank you very much. You mentioned financial health. Financial health is one of the things we've been talking about various discourse globally. We've had quite a number of discussions on that. Financial health, economic inclusion. Those we've been involved in a lot of tete-a-tete policy making that involves that around the world. And I think in the nearest future, I mean, not too far from now, financial health will be something that will take the center stage that we need to talk about. We've come from financial education also. We have done a little bit in that. I said we're going to go into regulation because when we talk, we cannot do without regulation. Let me just ask. I'm going to ask them in a wrap. What role do you think governments and regulatory bodies they've played in fostering the growth of mobile money platforms? And what are the key regulatory challenges or opportunities that you see in the mobile money industry? And I will wrap it up by asking you, how do you think policymakers can ensure that mobile money platforms are used responsibly to benefit consumers or customers, as the case may be? Thank you.
Thank you, Olu. So the role that the governments and regulators have played in fostering mobile money growth. First of all, it's good that governments have created enabling environments to develop, to innovate. By this I mean there are no restrictions in the environments that we are in to innovate. They allow for innovation, and in some instances, some regulators do have sandboxes where the innovators can test their products in a regulated space. We also have regulators creating working groups to have discussions around certain innovation. So these are some of the things that they have put in place to foster mobile money growth. And then also regulators are providing guidance. For instance, they provide necessary regulatory guidelines, even in things like electronic money issuance, agent management, consumer protection. They do provide the guidance, and they also draft the laws. The laws are important because then it ensures the consumer confidence that these people are regulated and thinks that there's a big brother watching over them. So the challenges that are being faced mostly is what we had mentioned before, the fragmented laws across borders. And there's a great opportunity for regulators to create policies here that then foster innovation. And again, there's an opportunity for us to harmonize these laws across the borders. And the last thing you asked on regulatory is how policymakers can ensure mobile money platforms are used responsibly. It's basically to enforce proper consumer protection laws, to also be at the forefront of promoting financial literacy, because sometimes people just lose money or fall for scams or fraud because they are not well educated. So they should be at the forefront promoting financial literacy, and also regulating some of these platforms to prevent things like predatory lending and even outright fraud. And I mean, they can also insist that the providers provide clear terms of service so that then the users can know what they're getting themselves into.
Well, thank you very much. You actually mentioned something very, very important as we round up this edition of Fintech Africa. We're going to get into the challenges and the future outlook. But let me ask you, because we talk about responsibility and benefit of customers, but you mentioned fraud, and I don't want us to take that for a fun and run over it. Let me ask you this: what do you think are the major challenges mobile money platforms face today in terms of or in respect of cybersecurity, fraud, and infrastructure?
Wow. So, of course, cybersecurity threats are on the rise every other day. Even I think every week we do hear of a certain platform that has been compromised. Um, we also have the situation of fraud, and infrastructure still remains inadequate in some rural areas. So These still remain major challenges in in this space of mobile money. And some of the things that can be done is just strengthening the digital security of some of these platforms, and also expanding these agent networks deeper into the underserved regions so that these hurdles can be overcome.
Thank you very much. Thank you very much. Let me ask you this. I mean, on a general note, how do you see mobile money evolving in the next 5 to 10 years? And what role do you think it's going to play in Africa's financial ecosystem in general?
Okay. So, like we mentioned before, we are going to see mobile money being the key player in that financial health system. There will be more partnerships with other industries that we call fintech adjacents that are not necessarily in the financial space, like the way we are having agri-tech, we are having med-tech, edu-tech, all sorts of fintech adjacents that are looking to solve problems in different industries. We will have more innovation coming on board from those fintech adjacents because they will be leveraging on a mature mobile money system. And also we have the rise of neobanks because neobanks they operate without physical branches. They operate without physical branches, offering fully digital services. And with a mature mobile money platform, we tend to have some of these neobanks growing in our markets. And we'll also start having mature discussions around open banking because then when these banks share their data that they need to share, we can have more innovation happening around that. So these are some of the things that I'm seeing mobile money being able to do. They will not really focus so much on their transaction fees like now. Maybe they will be focusing more on the shared value that is created by partnering with other people instead of just focusing on revenue coming from transaction fees. That's how I can see them evolving.
Thank you very much. And to be honest, I actually agree with the points that you have raised, especially when you talk about the fintech adjacents. And I think we still have more to do in incorporating all those adjacents into the main stage fintech body ecosystem, as the case may be. Um, rounding up. What more do you think can be done to ensure mobile money continues to bridge the financial inclusion gap for marginalized populations? What do you think can be done? You know, when you look at mobile money and bridging the financial inclusion gap and the marginalized populations. Thank you.
Okay, there's been discussions that the convenience narrative has already been addressed. The convenience problem has already been addressed. Mobile money has already provided convenience. Now, people are beginning to say the transactions costs are really high. And sometimes, like in our markets, when there's a comparison between one mobile money provider and the other, you can see quite a big difference. And so, there's to bridge this gap for financial inclusion, we still have to reduce the transaction costs. I know in some countries within East Africa, mobile money is refusing to really come to the front because the transaction fees are very high. And before, the first question somebody asks at an agent outlet is how much will this cost in terms of transaction fee? And when they get the fee, they decide to use cash. So much as we are saying mobile money has bridged financial inclusion, cash is still king in a good number of markets. And the barrier here is the transaction costs. So if you can bring these transaction costs down, during COVID period when we had some of these costs zero rated, there was such a growth in transaction volume. So costs should be managed, and also we can invest more in digital literacy. Now that we have, apart from USSD, we also have smartphones, which then increase the user experience and provide more services. Like we said, even the fintech adjustments can have can plug into those mobile money platform apps, we need to have more digital literacy. And then also we can increase financial inclusion for those underserved by actually creating products that are unique for these marginalized populations. People in the rural area or people with maybe low income, they don't transact every day. Probably you only transact once a month when you get your salary. And so there's no, I would not really see the need of being on a mobile money platform if I only use it once. But then if we design products that speak to their needs, maybe if it is a farmer, like in the agri-tech space, apart from this platform just providing send money, pay bill, it's providing other services like predicting, weather forecast, giving them knowledge on. I have seen people in the agri-tech space having things that predict, oh, you're going to have this particular insects invading, utilize this kind of pesticide before this time. So when we add value to some of these mobile money platforms to suit the unique needs of this population, then they will use it more. And then also another good thing would be partnerships between governments and private sector to expand reach. And I liked also the partnership between government and private sector. Like here in Kenya, we had a partnership between Safaricom, Jamii Telecom, and a Chinese phone manufacturer, so that together they can manufacture cheaper smartphones, so that then everybody can have access to smartphone. We know the penetration of smartphones generally tends to increase the use of mobile money. So yes, to sum it up, for us to bridge this gap, we need to reduce the transaction costs, increase financial and digital literacy, develop products that speak to the unique needs of the marginalized populations, and have more public and private partnerships for reach.
Thank you very much. We've come to the end of the interaction today. But on a general note, what do you want to tell practitioners and in the industry on a general note, just from you?
Okay, on a general note, for me, it will be three things: collaboration, collaboration, and collaboration. That is just the way to go for all practitioners in this space and for any player. Together, we make a stronger bond because we bring our unique strengths to the table.
Thank you very much. Collaboration, collaboration, and collaboration. That really is resounding, and I'm pretty sure that every player in the industry is aware of this, and we continue to preach the message of collaboration. Thank you very much, Emily Odindo, for being with us this day on another edition of Fintech Africa podcast. It's been a very wonderful experience having you delve into all the issues and you actually taking time to pee them out one after the other, which makes it very easy to understand, also to knowledgeable also. And thank you for what you're doing in the industry. It's a pleasure having you today. Ladies and gentlemen, it's the end of another edition of Fintech Africa podcast. Until we see you again in the next couple of days, I remain yours, Ajetmobi Olumayowa from Financial Inclusion Africa. You have a beautiful